All right, Bulls and Bears, back with another dose. BX4, Bolt to the bus. Let's go ahead and get right into it today. First of all, you can officially call me Four Eyes now. I have a prescription sunglasses, not sunglasses, but a prescription glasses, which are blue blockers. Remember the blue blockers I used to wear? They look like sunglasses. So no more sunglasses looking glasses for me. These are official. These are prescription. And I think they made my eyesight worse. When I take them off now, everything's really blurry. It starts to get better after a few minutes, but yeah, I think your eyes just need to adjust. But officially Four Eyes here. Anyways, let's go ahead and talk about the markets, the economy, some more economic data that underpins what we've been talking about here. How the economic deterioration is being mostly hidden from the general public, mostly hidden. You have to dig between the lines, read between the lines, connect the dots in order to realize what's really happening. We're going to take a look at some staggering debt numbers today. Banks continue to loan out money even though delinquencies are rising. More people rushing to borrow money from their homes. Home equity lines of credit shot up pretty dramatically. Let's talk about the markets first. We had that big sell off yesterday, which was Monday, August 5th, 1,000 plus points on the Dow Jones. And we told you today would likely be a green day, but it was unlikely that it would equal the sell off from yesterday. So we did see the Dow Jones recover some today, but just like we said, it didn't make a full recovery from the sell off yesterday. For example, Dow Jones was up 294 today, 1,000 point drop yesterday. So it only recovered about 1/3 of what was sold off yesterday. So we'll see how this goes. We'll see if the plunge protection team is going to come in and rescue these markets. Could it be the top 10% coming in, which own about 90% of stocks, in buying this back? So the same group that sold stocks off because of fear and panic are now going to buy the stocks back and bring it to all-time highs? I don't think so. I think any all-time highs that we see here is going to be completely the plunge protection team with a agenda to make the economy look good going into November. Of course, everybody knows what's going on with that. So it wouldn't surprise me. And I only believe about half of what I read. Even the charts that are put out by the Fed, you have to question everything now, especially now. Don't just believe what you read, even what I say. I mean, I try to give you my take on it. I don't just read you the news. Anybody can do that. Anybody can read the news, but you have to connect the dots here. But don't even take my word for it. Look for yourself. Look at the data. What do you see around you? Do your friends, relatives, neighbors, are they struggling? Are they doing good? Mine's been a mix. As far as like friends, relatives, mine's been a mix. I've got a lot of friends and relatives that are doing worse than before, but a portion of them are doing better than before. I've got some friends, relatives also that work in the banking sector. They're doing very well. And we're going to talk about bank profits and company profits here in just a little bit. Let's go ahead and start right here. Got some news coming out here, and let's talk about the debt levels. The debt levels. Debt continues to climb, and this is how you know that they're keeping the economy propped up here. Americans owe a record $1.14 trillion in credit card debt. This is as of the end of the second quarter. The numbers are out. Of course, that increased. It increased from the first quarter, and of course, it's up big time year over year. Back in 2008, we saw debt drop because banks pulled back on the lending, right, for a period. Ultimately, they opened lending back up, and as you can see, debt's back at all-time high levels right now. But the real economic downturn will likely not kick in until banks pull back on the lending. But again, banks have been guaranteed endless life support, especially the big mega banks. And the ones that do fail, they'll just be gobbled up or bought up by the big mega banks. So this is what's going to continue to go, and that's why we see a more likely chance of inflation than we do of a deflationary crash. Now we also have the black swans out there that are flying around. World War III, the grid going down. We've been told by some very high level people to be on the lookout for a massive outage, cyber attack, cyber event. So I'll prepare for that. I'm not gonna go hide in the corner and wait for it, but I'm gonna prepare for it. I'm gonna try to have some food put away, some cash out of the system just in case that does happen. I'm not trying to scare people. I'm just letting you know I'm planning for that. It wouldn't surprise me if this whole thing went dark tomorrow. The banks would be dark. You couldn't get your money out of the bank. What a better way to hide an economic collapse. Oh, somebody hacked Russia hacked this. The whole system went down. Oh, the economy was doing so great up until that happened. Just like 2020. Remember that? Remember how delinquencies were rising? We started noticing some economic difficulties within the U.S. population, especially the working class, the middle class. Then 2020 happened. It covered everything up. Massive stimulus checks, drop interest rates, rock bottom. Of course, inflation's still here and hasn't gone away, but yet they're only trying to get us back to 2% inflation. So even though we're in a bubble right now in the housing market, everything's too expensive, people taking on massive debt just to get by, they still want prices to go higher. Nobody's talking about deflation. Pretty amazing. Americans are carrying a record amount of household debt. So another example of what I said here, and what I've continued to say, it's going to get worse. Debt just got worse. And there's still people out there, not many, but some, that say, oh, I'm doom and gloom, I'm negative when I say things are going to get worse. Another example, debt just got worse. It got higher, right? It got higher. In the 3-month period from April to June, total credit card debt rose 1.14 trillion to 1.14 trillion, an increase of 27 billion, or about 1% from the previous quarter. According to the report, banks are still loaning out money. It's going to continue to happen. We will not see deflation overall until banks cut off the lending, they start dropping credit card limits. But that's not going to happen unless something breaks, unless some of the gears get jammed up in this money printing system. This is what it was designed to do. It was designed to inflate. And deflationary corrections are very rare with this type of monetary pumping going on. Airbnb, we see a big drop off in demand for Airbnb, down 14% on earnings miss. The company warns of slowing U.S. demand. So the U.S. consumer, they're pulling back on certain types of spending. Less people going out and getting Airbnbs, drop off in demand. Of course, we see that in the Airbnb plunge on earnings miss. Sometimes you look around and it doesn't seem like consumers are pulling back, does it? You see the stadiums packed. You see the Taylor Swift concert tour. What did she make, $1 billion or something like that? People just throwing money, record travel around the holidays. You think that people are just nonstop spending money. And for the most part, it's true. Banks are still allowing people to go further into debt. And until that changes, then you're likely still going to see crowds at the concerts, at the airports, record travel, more record spending, more debt accumulation until that changes. But there are some signs out there that even with all the spending and all the debt that banks are allowing consumers to get into, that there's still some areas where we're seeing a drop off, and that's Airbnb. Let's talk about this here, Rivian. Of course, some of you are in this trade with me. We are making money on the downside. Well, we were ahead of the game there a few weeks ago when we got into this trade here. Rivian sees another quarterly loss, but costs per vehicle are coming down. So here's a money-losing company, earnings per share, negative territory. And I think a lot of the electric vehicle stuff was hype. Nothing against people that bought electric vehicles. I know people that have an electric vehicle, they love it. They're saving a lot of money on gas. But overall, it was a lot of it was fear-based because gas spiked up. Remember when gas first went up? A lot of people panicked and went out and got the electric vehicle. Gas is still high, so I think a lot of these people are still saving money. But there was a lot of hype, and I thought it was very overhyped. And when you look at Rivian stock, it went up too far too fast, in my opinion. That's why I told you here that we're going to try to make money on the downside. Thanks to everyone that supports this channel, that sends me the super thanks, and just the people that watch. Because the money I make on this channel, I'll reinvest it, and I'll let you know the investments, and hopefully people are learning some from that. Or I'll put it back into the channel, better equipment, etc. So thank you everybody, everybody that supports the channel. We appreciate that. Let's jump over this here. We've got media. Media is feeling the pain of the consumer slowdown. And a lot of this is advertisement based, right? Advertisers aren't making as much money. They're not giving as much money to media companies. I even saw a slowdown in ad revenue here in this channel. Have a look at this. Hollywood Reporter, broadcasting and cable to shudder as this year's media meltdown escalates. Axios slashing 50 employees. We've got some different things happening with consolidations. But the media is feeling the pinch here of the consumer slowdown. What else do we have here? We talked about the cable cutting, millions of people cutting their cable. I think a lot of people are just cutting the cable TV and going to these app-based shows or just watching these apps, right? You've got Hulu out there. A lot of good free ones out there. Freevee is free, as the name implies. Tubi is free. If you're in Amazon Prime's got a ton of stuff to watch on their video platform, Prime Video. Still $100-something a year though. It's not free, but comes along with the Prime shipping that you get from Amazon, which I get it still because I need stuff quickly. When I order some stuff, I want it quickly. Let's talk about this here. We talk about companies raising their prices and blaming it on overall inflation. Well, if it was inflation, then they would just raise their prices enough to cover the higher cost of doing business. And then you wouldn't see profits explode higher because they're only raising prices enough to cover their increased bottom line expenses. Well, that's actually not happening. They're actually making more money. Corporate profit growth is on pace for its best quarter since just before 2022's inflation spell. More proof that these companies are participating in greedflation. They're not just raising prices because of higher wages or because of higher energy costs and transport costs. That's part of it, but we know that there's a profit motive here in what people have labeled greedflation. After last week's quarterly results, Megastorm's second quarter earnings season is roughly 3/4 of the way through. Signs of continued consumer caution and deal hunting could be found in lots of places, especially fast food. And they talk about McDonald's and Starbucks. But overall, we're seeing corporate profits grow. So what does that tell you? That tells you the obvious, right? Greedflation, folks. Let's talk about this here. The housing bubble, still massively overblown. Not seeing many corrections. A few corrections here and there, mostly in Florida and Texas. But here's the median income needed to buy the median priced home. San Jose, California, you need $463,000. San Francisco, $336,000 a year you need to make. San Diego, $241,000 a year that you need to make. Los Angeles, $207,000. Seattle, $192,000. New York City, $186,000. Boston, $186,000. Denver, Colorado, $160,000. Miami, Florida, $159,000. Washington, D.C., $155,000. Wow, so we're the third most expensive here of larger cities. San Diego's the third most expensive. Wow, higher than New York. That's pretty crazy. Sometimes I wonder how I'm still making it here, but I am somehow. More Americans tapping home equity lines of credit. So here we go. Overall delinquency rate still pretty low, didn't increase. Of course, the housing market's in a sales slump right now. Sales near all-time lows. Prices still remaining stubbornly high. But now with homeowners, a lot of them starting to tap their lines of credit, we are going to start seeing a shift. Now let's jump over to the housing bubble real quick. We know that lots being done to keep the housing bubble inflated. That's one of the keys. It's the biggest asset class in the world, actually, United States housing market. Look what's happening here. Here's how Bloomberg put it here. And we know that Americans are tapping their home equity again. Federal home loans, the banks that give out these home loans, face amped up pressure from the current administration and senators. Right? They are pressuring these lenders to keep loaning out money to keep the housing bubble from imploding. Right? So there's a motive here. Right? U.S. housing market, the biggest asset class in the world. They don't want the housing bubble to go bust, especially right now. So of course they're pressuring the lenders, they're pressuring the banks, the lenders, keep loaning out money. And what they're doing is they're guaranteeing that they're going to come in and buy these mortgages. You have the government back there. They can buy an unlimited amount of mortgages. They can buy 100% of the mortgages. There's no limits, unlimited. They can just add it to the debt. 35 trillion is nothing. They can double this debt if they want to. I had to pause it here, grab my headset. We just had a big fan come on. It feels like it's about 90 degrees here right now. So close out the last couple minutes of this report with the headset. So just wanted to explain why I look different. Let's talk about this here. The down payment assistance programs are exploding. New ones coming out every day here. Let me just see here. Folks, take a look at this. Another way they're keeping the housing market propped up, keeping the bubble inflated. Mobile County, that's Alabama, right? Reboots down payment assistance program. Brand new, just came out 5 hours ago. Realtor.com, VP pick there. Talking about housing, they're going to probably look for new ways to keep the bubble inflated. Minnesota Department of Agriculture, latest round of farm down payment assistance grants because farmers can't afford land. Detroit down payment assistance program 2 weeks ago. Folks, on and on. How to get a zero down payment mortgage. It's all designed to keep the bubble inflated, folks. If we had sound money, if we had a currency that was backed by something that couldn't be created at the click of a mouse to infinity, then you wouldn't see this. You'd see, if we went back to sound money, you'd see a 90+% drop in home prices. The cost of living would plunge. We're going to keep an eye on the BRICS nations. Supposedly, at some point, they're going to be announcing a metals-backed currency. Do I trust China? Do I trust Russia? No. Do I think they're going to go to this? I have doubts. Because the cost of living would plunge. If they would go to a sound system of money, the cost of living in those countries would plunge. For a while, it would be very bad because you would see a lot of job losses. Because remember, people going into debt, spending money they don't have, that creates jobs. That creates economic activity, and they can put it out there that it's economic growth. So when you go back to sound money, the opposite happens. Initially, you see a plunge, a lot of job losses, but then the cost of living comes down, and then ultimately it's easier. It's getting through that first couple of years, though, after the sound currency gets re-implemented. In this case, it would be re-implemented. That's the hard part, right? So that's why I always say prepare for things to get worse before they get better. And maybe we'll never go back to a sound currency. Maybe the United States or the rest of the world will never do it. And if we don't, that's going to be even worse. But it's going to be more of a slow motion grind, right? So prepare for the bull. What did I used to say? Somebody reminded me down in comments. A saying that I used to say. I totally forgot about it. Ride the bull, prepare for the bear. That's it, folks. All right, bull, boom, bear, bust. We're out. Keep stacking, everybody. Bye for now. Peace.